All right, let's go ahead and get started. So I'm gonna do the replay on TradingView because the soft for FX doesn't let me come all the way to the current date until the close. It only stops like a few days before the current date. So we'll do the entire breakdown. We'll start from the daily time frame and down. This was a scalp that we took in New York session when there were interest rates coming out from the UK. So we traded that and then just holding that onto the Asian session, which is where we took another scalp, and then holding that through NFP today until the close and taking partials along the way. So if anyone missed this is pretty much like how would you take that trade? What was the entire analysis like? And if you did end up taking the trade, then it's looking at reanalyzing your trade. You know, we always do post trade analysis for all of our trades to see how we could improve and everything like that. So we're going to start off with the daily time frame. Very first thing we're going to do is mark off that resistance and support areas. So on the daily time frame, we have a resistance that's being formed right here at 158 level flat. So right at that level. And then let's do a support. So we know that this is the daily support, right? And it's cutting through the previous consolidation areas. If we look to the left, then you're going to continue to see confirmations of price cutting through fake outs at this level or even resistance and support levels, right? So as if your line, whatever zone that you're creating, support or resistance, if it keeps getting tapped into by multiple candles as either support or resistance in the past, just know that that's a very strong level, right? So this is a very strong level. If price breaks below this, then we know that it's going to drop down to the next support area and continue down for additional like 100 or more pips or so. So in this case, if price were to break below this 155 area, let's say 155, 100, if price were to break below that, then we know that it's going to continue all the way down to the next support area. So I always look to the immediate left first. So when I'm looking to the immediate left, this is the first resistance that price has to break, right? And then it goes to this, and then it goes to this, and then it goes to this. So if it breaks this, then this is where I'm going to create my next support area. Then I look to the left of that, and that's that consolidation support. And if I go further back, then I'm going to continue to get more confirmations at this level that this 153 area that we just marked off was respected as resistance here, right there, and then even further back you go, support, and you continue to get more confirmations. Any questions about that?
Nope, all good from me.
All right, so this is gonna be that 153 700 area. So that's pretty much what we're gonna mark off here, and then another thing that we're gonna do is currently we see price kind of pushing above this, right? So another level that we had price kind of reacting towards was this 155 700 area. So if price continues below this, and that means like the 4-hour candles and everything like that, if price continues below this, then we can take quick scalps coming all the way down to 155 200 down here for about 50 to 60 pips or so. And if that's broken, then we can continue to look for more trade opportunities. But the first priority here, when the new daily candle forms, is looking for a sell opportunity if 155 700 is broken. Looking for a sell opportunity coming down to 155 100. And if that's broken, then waiting for that daily wick fill. And then if that's broken, then you continue further down. And the reason why we're looking at that daily wick fill is because of this area right here. Make sense?
Yep.
All right, cool. Let's drop down to the 4-hour now and let's take a look at what's happening here. So on the 4-hour time frame, we have a downtrend, right? That's still continuing. You have pretty much, I'm gonna mark off this zone just to visually show you guys, but you don't really have to mark it off. Or you can adjust some of these levels here if you like, but I'm gonna mark it off just to visually show you guys that support area that price has tapped into once, twice, 3 times, and 4 times. The 4th time it just started consolidating here. And then it broke all the way down to that 154 800 to 154 600 area down here, and then it continued pushing right back up. So what you can do is adjust your level. So if I'm dropping down to the 4-hour time frame, I know that 155 100 area is very important on the daily time frame, but I'm going to adjust this down to that 4-hour support that's being formed here. So let's say 154 700. So now as long as price continues pushing down, then we can look for potential sell opportunities. At the moment, this is 10 a.m., so that's New York session. So we didn't trade until Asian or anything like that until interest rates actually came out, right? So we're gonna wait for the 4-hour candles to flip. We're gonna wait for the interest rates to come out. And matter of fact, let me pull that up. Interest rates. So interest rates came out yesterday. So that means we're looking for November 4th around 5 a.m. This is November 3rd, 10 a.m. So that means that we're pretty much going to skip through on the 4-hour time frame until we can wait until November 4th around 5 a.m. when interest rates came out. So right now we're still in that downtrend. Price is still maintaining those lower highs and lower lows. And so what we're seeing is price reacting to the previous support areas here and closed this 4-hour candle in New York session, closed right at that level. And now we want to see, is it going to continue bullish or is it going to flip back down? Any questions so far?
Nope.
Oh, me.
So we push back up, and this is that New York session close. So we're pretty much done trading at this time for that day, unless you're trading Asian session, and now we're waiting for New York session. So here's that preparation for New York session as we're pushing down. Drop down to the 1-hour time frame. You got a massive sell-off. We're breaking below 154.700. Drop down to the 30-minute time frame. And then here's that interest rates news candle that took us all the way down, right? So on the 30-minute time frame, you had that entire push down. On the 15-minute time frame, same thing, an entire push down. That 1 15-minute candle pushed down for about 87 pips. That was all interest rates. When they failed to increase their interest rates, and the investors pretty much took that as a market fear because the UK economy was not ready. And the previous month, so in October, we had Bank of England and almost every official Bank of England pushing the sentiment that we're getting ready to increase our interest rates, right? And that if they had increased their interest rates, then they would have been the first economy to do so in comparison to all the other major economies, right? All the other major economies, the US, Japan obviously being a little bit more accommodative, Europe, all these other economies, they're pretty much saying right now we're not ready to increase interest rates. If anything, we're going to taper back. What the UK did was simply jump right over tapering. So they didn't even start talking about tapering, but they were like, yeah, we're getting ready to increase interest rates. So that was bringing in optimism for investors. When they failed to increase interest rates, you saw this major drop that just happened, right? So then what we waited for was that 4-hour support to be broken, right? So since it's interest rates, it's a high impact news. That's why we started dropping down to the 15-minute time frame. So our entry was actually taken on the 15-minute time frame, the first one here. We waited for this candle to close. As the following candle broke the low, that's pretty much where we took the entry. But as you can see, there was a break and retest here. So the thought process here was, as long as we can close below that 154.700 with some volume, we're pretty much set to continue, right? So from higher time frames and down, so daily time frame, 4-hour, 1-hour time frame, we're already in a bearish trend. We know it's going to be a bearish trend. Now we just have to make sure that our entry is at an optimal level, right? We're not trying to catch an entry as prices continuing bullish on a 15-minute or a 30-minute. We're trying to make sure that there's multiple time frame analysis or confluence. Sorry, does that make sense?
Yeah.
So our entry was on this candle as price pushed down, and our initial, or my initial entry price, and everyone's is going to vary a little bit, was 154.366. Our stop loss was 154.745. So keeping it right above that 700 area, right? Giving price enough room to kind of come back and make some top wicks and stuff. And then our TP, what we had determined at that time, was 153.200. So as we continue down, I'm going to go up to the 1-hour time frame, or even 4 hours. There you go, 4 hours. So 153.200. The thought process here is, as we continue pushing down, we're going to turn the scalp into a day trade. So we're going to take a scalp, we're going to take some partials, and then as price continues to drop down, we're going to continue taking more partials. And then if there's another opportunity along the way, then we can look for some more scaling opportunities. So you get your first entry could be here or after that break and retest, as long as 154,700 was being respected as resistance. That's all we were looking for. And then price continues to push down here. So you look for your 10, 15, 20 pips, whatever you look for in your scalp. So now you have another break and retest. So if you missed on this entry, this would have been another one, right? Where you're getting a break and retest as price is pushing down. And this is us just writing the interest rates sentiment. So we're not actually trading right when the news came out. We waited until that 15-minute candle closed and we traded the reaction to the news. So that's the biggest thing that people also tend to get messed up on when they're trading fundamentals. You don't have to trade the actual fundamental that's coming out. You need to trade the sentiment to that fundamental. So that's why it's important to understand what are the fundamentals and what kind of sentiment are they pushing out. So we looked for, 10, 20, 15, whatever pips that you're looking for, took some partials, and then we still left the stop loss wide enough because on higher time frames, as you can see, there's been a massive sell-off. So we're still looking for some sort of a pullback on higher time frames or a correction or a break and retest that would help correct this entire overextended bearish momentum to the downside. Any questions about that? All right,
Nope.
let's take a look. So we continue pushing. And at that point, we were done with the session, right? And so 153,700 hit, and then price continued pretty much pulling right back up. And this is where you can take some more partials and things like that. This would have been a total of about 50 to 60 to even 70 pips. And coming all the way down here, we pushed all the way down to around 84 pips. So you could continue taking partials if you were still in that trade. And then price pushed down even more. So at this point, as price continues pushing down, it eventually did hit our 153,200 level. But by that point, as I started to see that price was pushing down and I was looking for like more partials along the way and everything like that, at this point, around 8 o'clock, actually not even 7:30, but the next 30-minute candle, as I saw that there was a lot of bearish pressure, I pretty much moved my stop loss to break even because we're already breaking below these higher time frame levels that we had marked off, right? And then I extended this move down my take profit level to 152 flat. And that 152 flat comes from, let's go on to the daily time frame again, comes from, well, if this daily level here is broken, then the next stop that we're going to is going to be down here. Everyone understands why I marked off down here?
Yep.
Yes.
Any confusions whatsoever about that?
Nope.
All right, awesome. All right, so go back to the 30-minute time frame. So pretty much at this point, done with the charts, done taking partials, moving to break even, right? And now I'm coming back, taking a look at what's happening in the Asian session. Are we looking for some sort of a pullback or anything like that? So I'm still waiting for a pullback. I'm still waiting for, or some form of consolidation. So either consolidation or pullbacks, because that's the only two ways that the market collects orders, right? So I'm waiting for that to happen just so higher time frame levels could be corrected with the massive overextended sell opportunities that the market has been presenting in New York session. So we start this pullback. Now we're kind of consolidating a little bit. And so there's a little bit more. Okay, so now we're coming close to Asians. Yeah, so this was the Asian session. So we pulled back up, right? Push right back up. That was a nice retracement. You go on to higher time frames, went on to the 1 hour, got the same exact confirmation that, okay, we're pushing up. And then 4-hour time frame, you got a nice break and retest right at that 153,700. So now this is where I took a scale in opportunity. Very first thing is 4-hour time frame, tapping right into that 153,700 and then flipping back bearish. So that was the first confirmation, right? So that's just my confirmation. That's not telling me that this is where my entry is. And then the second confirmation that I had was on the 1-hour time frame. Let me lock this just so this doesn't move. But on the 1-hour time frame, right on this candle, we came up and we created a top wick rejection, right? And the following 1-hour candle, even though it had bullish momentum to continue pushing up, it never passed that previous 1-hour candle top wick. Make sense? So what does that tell us?
Supports being formed?
No. What does that tell us about the buyers or the sellers' pressure?
Sellers are starting to overcome buyers.
One way, yeah. So basically what this tells you is that there's a top wick that has been made, right? So there's this entire range that has been left for the following 1 hour candle to come and fill and maybe even break above. The following candle makes a bottom wick rejection. So what does that bottom wick rejection tell us?
Showed that the sellers were taken out by the buyers.
Right, so sellers getting rejected, right? So you push down, you grab that liquidity with that bottom wick, you reject the sellers, and then we continue pushing up. Well, if price is going to continue pushing up, right, and we have broken above a significant level of 153,700 that we have identified from higher time frames, then why didn't we just continue pushing up, right? So when price failed to do that, and I'll go ahead and mark this off again just for you guys to see it visually. When price rejected this area, this is when I dropped down to the 30-minute time frame and even the 15-minute time frame to see what was happening here. But the thought process here was, all right, maybe this is simply a retracement and price failed to break the previous high. So if price rejects this and continues back down, then we can look for potential sell opportunities here as the previous hourly lows are being broken. So then I dropped down to the 30-minute time frame to narrow in into the price action even more. So then what do we see here? That this 30-minute candle left a huge top wick rejection. The following one closed almost like a doji. So what does this tell you right here when there's a doji close in a bullish trend?
Neither the buyer or the sellers were in like command.
Indecisive.
Yeah. So
Yeah,
the
so you had a little bit of buyer's pressure, but now this buyer's pressure was starting to weaken, right? And the following candle, same thing, just tapped into the same exact area and failed to do it, failed to break above it. So when this candle right here, and this was the Tokyo Stock Exchange open. So if you guys are kind of struggling with the timings as well, you can go onto Forex Factory and then scroll all the way down. So Tokyo opens up at 4, right? And then you can look up like Tokyo Stock Exchange open, stock exchange opening hours. It opens up at 9 a.m. local time, so then you could do, which is 5 p.m. on Friday. So that this candle is when the Tokyo Stock Exchange opened up, right? So that's where the seller's pressure started coming in. When this candle started breaking the low of the previous 30-minute lows, and then we started to see more pressure kicking in, how do you know that there was pressure, first of all? If you're just looking at this candle, how do you know that there's a lot of seller's pressure?
No top wick.
Right. So there was no top wick at all. What price did was just start pushing right back down. So this is where I took another sell opportunity. So this entry was 153,718. Stop loss was 153,800. I should also mention, by the way, that right when I was done with the New York session, as I put into Discord, I had trailed my stop loss from the initial entry to 153,800. So both of these trades had the same exact stop loss. And then profit level 152. So there you go. So as soon as this candle flipped back down, that's pretty much where I took that entry to the downside as it started breaking the previous 30-minute low. Same thing, look for those quick scalp opportunities, 10, 15, 20 pips, whatever you're looking for. So this came down to 20 pips or so. And then I started looking for my partials. So price continues pushing down. And the thought process was we just need to clear below this consolidation area on the 30-minute time frame, and then we're going to have enough volume to come back down and revisit the lows. And if that low is broken, then we're creating a lower low, which is the confluence with the higher time frames of the daily, 4 hour, 1 hour, all of them being in a downtrend, right? So now we're starting to see the 30-minute in a downtrend as well. So now we continue pushing down. And now here, we've created a new low. So now the thought process is we come back and we try to correct this bearish move to the downside, but 153,700 again being respected as resistance, and then we can continue pushing down. Any questions so far?
Oh yes, I have a question on this one.
Yeah.
On on the hourly, if you're able to go back to the hourly, if this wick right here wasn't formed, then, and let's say it was like here instead,
Mm-hmm.
then that's not what you would have been looking for. You would not have entered something like that.
No, I would have entered this then if price came back and like broke the previous support areas, which in this case would be here, or even down here, or even down here.
Okay, so this, would you say that, oops, this thing right here is one of the big indicators, plus this no top wick here?
Yeah, so pretty much the thought process was, well, we're already rejecting sellers, right? And we reject sellers just so we can continue pushing up. And if we're going to reject sellers and still not push up and break the previous high, then that means that we're coming to some sort of an exhaustion.
Got it. Okay. Yeah, that makes sense.
All right, awesome. So now let's drop down to the 30-minute time frame again. So yeah, pull back as long as 153,700 is being respected as resistance, we're good to go. So now we continue pushing down here. So now if you were looking for another, let's say, scaling opportunity where you missed this, then like how would you take an entry here? Well, price came down, created a new low, pulled right back up, created a new lower high, and now it's giving you a break and retest. So if price continues pushing down, let's say somewhere here, and I'll make this red just so when we go to different time frames, you guys are able to differentiate this against the other levels that we created. So as long as price can break below this, that's pretty much your sell opportunity to the downside. So you could take a high risk and high reward trade as soon as price breaks the support and continues and look for your 10, 15 pips, or you could wait for this level here to be broken, let's say 153,300 to be broken, and then wait for price to continue pushing down. So let's do that, 153,300. So see how it came down, but it never really broke the low, right? It just respected that support. You tap right into that area, pull back again. Now you have this sort of consolidation that's being formed. Pull back even more a little bit, but we're still coming right into that 153,700 area. And then there's another drop down. So you had essentially the same exact setup happen twice in Asian session, or even going into London session. This is London Open. You guys see that?
Yep.
Yes.
So then you could do the same exact thing where it's like, all right, well, if that low is broken, we know that it's coming to the downside, right? So if that low is broken, then that could be another entry, or you could wait for another break and retest here, and all of that. So then here makes a top wick. You could drop down to the 15, same thing. So all of that entire candle just broke the low of all of these 15-minute candles. Now you could create a top wick as it continues, it flips bearish. That's where you could take another entry, or even here as it continues down, or you could wait for another break and retest formation. So candles just continue pushing, right? And all you're really doing is just looking for price to follow that basic downtrend structure, right? Is there a previous resistance? Is there a previous support that price is breaking? And then just following this, and this is your entry for sell opportunities. So now as we start to break below some of these levels, this is where you start to take some more partials. So now you're starting to come into New York or pre-New York session right there. So this is like NFP. So right here. All right, so this was the NFP candle right there, right? The following one is a reaction to NFP. So you come back and close bearish, and then you continue pushing down. So same thing here, the same way that you would take that trade where you had a major top wick rejection, but we failed to continue above 153,300. This 15-minute candle closed bearish, and the following one broke the lows.
I took that one.
The NFP reaction.
The one that that trade you're just highlighting right here at 6 here. Yeah.
Give me 1 second here. This thing froze up. But let's see. Push up. Yeah, so this candle right here, that was the NFP reaction, right? And then after that, we just started consolidating. So that
Yeah,
initial.
go ahead.
Go
Well,
ahead.
my issue there was, I think it was my psychology. I was just being greedy, and I just wanted it to keep going. And where I may have tricked myself is I had a question about like wick fill,
Yeah.
because I was anticipating or hoping that was the problem. I was hoping price would drop down to complete a previous 4-hour or daily wick, but it
Yeah.
was not within this range. It was in a previous, it was in the past, right?
Uh-huh.
Does that still apply wick fill, or should that only be relevant within the current range?
You want to look at the current range, but also in this case, what happened here is again looking at those higher time frames where we didn't really get a full-on correction, right? So even on this, the 4 hour time frame right here as well, as we break these significant levels from daily time frame, all you have is a 4 hour break and retest. And same thing here, all you have is a 4 hour break and retest. So we're already starting to see signs of exhaustions here, right? And then if you go into the daily time frame, then even the daily time frame where that's a massive sell off, and we barely have a top wick on the daily time frame to continue pushing down. So now we're starting to come into like exhaustion levels, massive sell offs.
Oh, that's what I should have. Yeah, I should have paid more attention to that.
Yeah, so from the previous daily candle until now, that was like a 344 pip sell-offs that happened. Yeah, so looking at those higher time frame, and that's also why I was a little bit more skeptical. That's why I was starting all of this off as like a scalp and then into a swing trade. And it's because those higher time frames weren't giving us enough retracements. All we were seeing was like form of consolidation and then a push. Consolidation and then a push.
Right. So I mean, my problem here was is this writing? Oops, sorry. Is as I started to see price continue to like kiss these levels and
Hmm.
tap them multiple times, I
Hmm.
was tricking myself into thinking that, especially when I saw something like this, it would grab enough orders for it to continue to break this level
Right.
here, and it never did that. And then
Yeah.
as we started to approach the end of the week, I was like getting more and more anxious,
Hmm.
and eventually I moved my stop loss too close to well, too close to where price was, and I
Yeah.
got stopped out. But it wasn't profits, but yeah, it would have been a lot. I would have had a lot more if I would have just took some partials here instead of hoping, again, emotions,
Hmm.
hoping that it would break.
Yeah. So like even here, if you're going through that and you're thinking like, okay, it's gonna collect orders, or even here it's gonna collect orders and then continue pushing, like just map out the level. If it breaks below this, then yeah, potential, right? Same thing here. If it breaks below support, then yeah, potential. Same thing here. If it breaks below support, then yeah, potential. But if all price keeps doing is just tapping to the same exact level, if not higher, and just rejecting it and continuing back up, then that's just market collecting orders.
Got it. Lesson learned.
Yeah. So then like overall from like initial trade and coming all the way down like the lowest that price has been, that is just those two trades like around 150 pips. So if you're still
Nice.
holding on to this, I'm personally still holding on to parts of both. But both of them are completely risk free. So if you're still holding on to this, then definitely pay attention to those higher time frame levels. Pay attention to how daily is looking, how 4 hours looking, and also like the hourly as well. And if those 4 hour and daily levels are being respected, then you know that price is going to continue in your direction. The moment that you see there's going to be retracement happening and those 4 hour daily highs are being broken, then pretty much look to exit the trade because you can always re-enter. So don't try to hold on to it for too long if you can't, and if you see that price is going against you.
Don't be greedy.
Any questions about anything that we went over? Any confusions or anything like that?
Yeah, I'm gonna look for that entry more, or at least not more, but I'm gonna search for it.
Hmm.
That was a good one. I enjoyed that one.
So you guys, if you were to see the same exact setup, let's say next week, you understand pretty much how to take these trades.
Yeah, I have more confidence in identifying that opportunity and probably uh, not holding it for so long.
Hmm. All right.